Just 2 weeks ago, we have released a video where we said that SoFi stock will hit at least $20 per share before their earnings. And well, this actually happened. Actually, people in the comments asked us if it could get to $22 per share, and we said that this is possible. It wasn't just a wild guess. We actually explained why we think this will happen, and well, basically it happened. Right now the stock is at about $23 and it went actually higher already. So today I have a more interesting question and not as obvious as it was then. And the question is, can it go higher from here? I will not give you all the teasing of you will find out the answer to this question by the end of this video. No, I will tell you the answer right now. So basically, if you are a long-term investor, there is kind of no debate here. SoFi could definitely go higher. I will explain why this happened. If you are a short-term investor, there is an interesting pattern which we have found, and this pattern is something we didn't know about SoFi, that actually SoFi is a seasonal stock. And today we will talk both about long-term prospects for SoFi and the short term, looking at the next, let's say, 4-5 months for this stock. Hello and welcome to the Market Monkeys channel. My name is Vadim. Today we are talking about SoFi and their prospect for the long term and the short term. Let's start with the long term. If you are looking at the presentation of SoFi for these quarterly earnings, which they have on July 29th, I think, I mean, as an investor, can you be happier than that? Their net revenue is growing and growing really nice. The margins, take a look at the margins. The margins are both expanding and expanding faster and faster every single quarter. This is something similar to the Palantir effect, where the company, as it grows, it starts being actually better than it was previously. And one of the most important thing which Julia, my co-host, talks about all the time is the earnings. So actually, SoFi became a profitable company and the earnings are growing really good every single quarter, and we can see that this year will definitely beat the previous year. In general, financials are looking very good. But I want to focus on one single piece of evidence which is in the presentation, and this is member growth and product growth. If you take a look at cumulative average growth rate of members and products, you can see that they are 51 and 53%. What does it tell us? That the products are growing faster than members. It tells us that SoFi is actually managing to cross-sell and offer more and more products to their existing customers. Because if you are a business like SoFi, there is two ways for you to grow. First way is to attract new customers, but there are limitations to that. First of all, population is not growing exponentially, so at some point you will run out of people to sell to. And second of all, well, you have a competition, and banks, regular banks, are not going anywhere. Companies like Upstart are not going anywhere. So what you need to do as a business is to focus on cross-selling your products to your existing customers. And this is exactly what SoFi are doing. So the future is bright, financial side of the business is booming, numbers are amazing, and basically everything is going SoFi's way. By the way, I know we haven't talked about like crypto and the new regulations which Trump administration has and a bunch of these different things. If you want us to make a video breaking down all of these catalysts for SoFi, please write a comment. Don't forget, by the way, to press the like button and subscribe to our channel while you at it. Now let's talk about fun stuff. What will happen to SoFi stock in the short term? So this thing we are talking about is seasonality. I would never think that SoFi stock is seasonal. And by the way, for those of you who don't know what seasonality is, basically it means that a company stock behaves differently in some parts of the year than other parts of the year. This could happen because of various reasons. Retail, for example, are usually booming around holidays because they sell much more, and in spring and summer they sell much less. So you can see kind of the movement of the stock based on seasons of the year. I would never think that of SoFi, but actually SoFi, one of their strongest months, if we're looking at the previous 5 years, is July, and two of their weakest months are August and September. So based only on that, I would say that there is a very good chance that SoFi stock will pull back from what it is right now. And right now we're talking about something like $23 per share. So if you are looking at the very short-term risky trade and actually trying to time the market perfectly, you can try selling the stock of SoFi right now and buying it back somewhere around end of September, because October is one of the strongest months for SoFi. And this seems fairly logical because first of all, SoFi stock has rallied a lot recently and at some point it has to pull back. Second of all, the valuation right now is pretty stretched. I mean, SoFi is an amazing company. We talked about the financial, the prospect, the business, everything. But PE of 100, close to 100, it's kind of begins to feel a bit too much, and it begins to feel too much in the short term. Again, if you are buying for the long term, if you want to buy SoFi stock, never look at the price of what you bought and just rediscover it after 3 years holding in your portfolio. I think you will be fine, and this is a good business to buy. In the short term, I would actually wait to the end of September, as I mentioned previously. If you found this information interesting, valuable, don't forget to press a like button and to subscribe to our channel, and I will see you next time. Take care.